Hello guys, good day. I am Vincent Joseph Larnatural, and today I am going to report to you the continuation about the global financial crisis. So, the period of extreme stress in global financial markets and banking systems between mid 2007 and early 2009, which is known as the global financial crisis, has caused most of the families to have difficulties in paying their loans. And this social phenomena has triggered the rapid reselling of MBS, or the otherwise known as the mortgage-backed security. So the question here is, what is a mortgage-backed security? So a mortgage-backed security, or MBS, this is an investment similar to a bond. Meaning to say, investors in MBS receive periodic payments comparable to a bond. And these mortgage-backed securities, loaded up with subprime loans, played a central role in financial crisis that began in 2007 and wiped out trillions of dollars in wealth. You may be asking, what is a subprime loan? So, a subprime loan is simply a loan offered to individuals at an interest rate above prime. These individuals are those individuals who do not qualify for conventional loans. Why a financial crisis that happened in US spread all over the globe. So this is because since many investors in US were foreign governments, corporations and individuals, the crisis spread like wildfire back to their countries. And until now, some of the countries like Spain, Greece are heavily indebted and debt relief has come at a high price. However, after the first month in office of President Barack Obama, he pushed for a large Keynesian-style stimulus package that helped the United States to recover from the crisis. A Keynesian-style stimulus, this happens when policymakers deliberately seek to stimulate one or more of the components in aggregate demand to boost output, jobs, income during an economic recession. Next slide, please. So, the global financial crisis started from the mid 2007 until early 2009 caused, first, many banks around the world incurred large losses and relied on government support to avoid bankruptcy. Second, millions of people lost their job as major advanced economies experienced their deepest recession since the Great Depression in 1930s. And lastly, the recovery from the crisis was also much slower than past recessions that were not associated with financial crisis. Next slide, please. So, what are the things that caused the JFC? First is the excessive risk-taking in favorable macroeconomic environment. In the years leading up to the JFC, economic conditions in the United States and other countries were favorable, meaning to say that the economic growth was strong and stable, and rates of inflation, unemployment, and interest were relatively low. In this environment, house prices grow strongly. So, the expectation that house prices would continue to rise, this has led the households, especially in the United States, to borrow imprudently to purchase and build houses. A similar expectation on house prices also led properly developers and households in European countries such as Iceland, Ireland, Spain, and some countries in Eastern Europe to borrow excessively. Many of the mortgage loans, especially in the United States, were for amount close to or even above the purchase price of the house. And a large share of such risky borrowings was done by investors seeking to make short-term profits by flipping houses, and by subprime borrowers who have higher fault risk, many because their income and wealth are relatively low and others have missed loan repayments in the past. So you guys may be asking, why did the banks and other lenders were willing to make increasingly large volume of risky loans? And here are the reasons. First is the competition increased between individual lenders to extend ever larger amounts of housing loans. that because of good economic environment seemed to be very profitable at that time. Second is that many of the lenders providing housing loans did not closely assess borrowers' ability to make loan repayments. This also reflected the widespread presumption that favorable conditions would continue. Additionally, some of the lenders had little incentives to take care in their lending decisions because they did not expect to bear any losses. Instead, they sold large amount of loans to investors, usually in the form of loan packages called mortgage-backed securities or MBS, which consisted of thousands of individual mortgage loans of varying quality. And lastly, some of the investors who purchased MBS product mistakenly thought that they were buying a very low risk asset. So, the second factor that caused JFC is that the increased borrowing by banks and investors. In the lead to the JFC, banks and other investors in the United States and abroad borrowed increasing amounts to expand their lending and purchase MBS products. So, borrowing money to purchase an asset known as an increase in leverage, this magnifies potential profits but also magnifies potential loss. As a result, when house prices began to fall, banks and investors incurred large losses because they had borrowed so much. And additionally, banks and some investors increasingly borrowed money for very short periods, including overnight, to purchase assets that could be sold quickly. The third factor that caused JFC is the regulation and policy errors. So, the regulation of subprime lending and MBS product was too lax, meaning to say that the regulation is not tight enough. In particular, there was insufficient regulation of the institutions that created and sold the complex and opaque MBS to investors. Not only were many individual borrowers provided with loans so large that they were unlikely to be able to repay them, but fraud was increasingly common, such as overstating a borrower's income and overpromising investors on safety of the MBS products they were being sold. In addition, as the crisis unfolded, many central banks and government did not fully recognize the extent to which bad loans had been extended during the boom and the many ways in which mortgage losses were spreading through the financial system. That ends my discussion. Thank you so much for listening.